Good afternoon, everyone. Thank you so much for joining us. I'm Sherry Eccles with Norcom Mortgage, and I'm very happy to be able to introduce our speakers today. I wanted to just give you a little bit of background on the topic, and that is the community land trusts. I want to be clear that while this group is talking about the community land trusts that they work with in Long Island, there are land trusts across the entire state. So the reason we felt this was an important tool to add to the education series was because there is likely one of these in your market. And when it comes to the groups, there are about 60 of them across the state. But Long Island Housing Partnership is really the gold standard. So they've been leaders on this since the beginning, and it felt like they would be, really the best people to introduce our group to the topic, knowing that this is going to be something that you'll be able to apply in your own market with your own land trusts as well. So with that, I'll introduce Peter Elkowitz, who is the President and Chief Executive Officer of Long Island Housing Partnership, and James Britz, the Executive Vice President and Chief Operating Officer. Just going to give you a little background on each of them. So Mr. Elkowitz has been with Long Island Housing Partnership since 1989. He's responsible for the overall operation of LIHP and its affiliates. He holds a Master of Science in Policy Analysis and Public Management. And in June of 2002, he completed the Senior Executives Program in State and Local Government at the John F. Kennedy School of Government at Harvard University. He's also received the Harry Weiner Distinguished Alumni Award in 1995 and the Governor's Award for Excellence in Housing in 1994. He's a member of the 2007 class of the NYMBA Partnership, the Academy for Regional Stewardship at Malloy College, and currently he serves on the advisory board of the New York Housing Conference, is a board member and treasurer of Grounded Solutions Network, and a board member of the Empire Justice Center. Mr. Elkowitz served as chair to the Federal Home Loan Bank of New York Affordable Housing Advisory Council and was a former member of the Long Island Regional Planning Council. And lazy guy, can't you tell? And James has been with Long Island Housing Partnership for over 20 years, and in 2016 was promoted to Executive Vice President, and then in 2019 to Chief Operating Officer. He works on the overall implementation of multiple affordable housing development and supportive programs, including responsibility for supervision of various office personnel matters. Mr. Britz previously served on the Affordable Housing Advisory Council for the Federal Home Loan Bank in New York. He is a member of the 2010 class of the NYMBA Partnership, I'm probably pronouncing that wrong, the Academy for Regional Stewardship at Malloy College. He also served on the board of directors for Long Island Community Development Organization, the We Live New York Board of Young Professionals in New York State, and the South Country Community Land Trust. So both of them obviously have really extensive backgrounds. They're really passionate about what they do. I have the great pleasure of having been able to work with them for over a decade, so I can speak to their professionalism, their dedication, and their overall general awesomeness. And I'm happy to be able to call them friends and turn this over to them. So thank you again, Peter and James, for joining us.
Thank you very much, Sherry. Appreciate it. And yes, we're very much friends. I want to also thank the New York Mortgage Bankers Association for asking us to speak here today and to learn more about the community land trust models and why they're used. So thank you. James, if you could just flip to first. Keep it going. So if anyone needs, you want back one? If anyone needs to get in touch with us, you can contact us on the PowerPoint presentation. There's all our information. If you need to reach out to James or myself after this presentation, please feel free to do that. I'm going to start my presentation by talking about something that usually the terminology is confused, since we use acronyms a lot like CLT. We talk about land banking, we talk about land trust. Both of those terms usually get mixed up. So I just want to spend a moment explaining the difference between a land bank and a land trust. So if you look, there's a great chart that was done by one of our colleagues up in Burlington, Vermont in 2012, because they probably get the same questions that we get. Aren't you a land bank? The answer is no, we're a land trust. And if you could see, there's some major differences between the two. The primary focus of the land bank is short-term ownership of vacant and blighted land. So if you have a contaminated piece of property, basically it would go in the land bank, all right? Whereas the land trust is the complete opposite. It creates long-term stewardship of land and buildings, all right? So the land bank's only for a short period of time. The land trust is over time. If you look at the corporate status, usually it's a public agency, a governmental agency, municipal corporation that is a land bank. Whereas in the land trust, it's a private not-for-profit, which is what we are. All right, we being Long Island Housing Partnership. Now, if you look at the composition of the board, this is interesting too, because under the land bank, it's usually political appointees. Whereas under the land trust, this is very taken very seriously. The land trust has a tri-party group that is made up of leaseholders, that means the homeowners of the homes that are in the land trust, community representation from various community organizations or even levels of government. And then there's the public representatives as well, who could fall under the public representation of the board. So the board is made up of 3 different groups, and it's important to understand that those groups really all have input in how the land trust operates. Land acquisition, usually for the land bank, it's purchased on the open market, it's surplus land. Whereas under the land acquisition for land trusting, it's usually private donations. It could be from the public. We get a lot of our properties from the local municipalities, the prior tax default properties. They're turned over to us for a public purpose, which is to build affordable housing. Misnomer a lot of times is exemption from property tax. The land banks are exempt from property tax. They're usually, as we said, owned by a municipality or another quasi-public agency. Whereas in the land trust, our homeowners do pay the taxes on the property that it sits on and for the house that's sitting on that property. Duration of land. The land bank only holds it for a short period of time. The faster they can get rid of it, the better they are. Whereas in the land trust, it's really meant to hold the land in trust forever. And that's one of the things I'm going to talk about in a moment. And again, you can see the other items down there, but there's almost like it's the polar opposites between land trust and land bank. But a lot of people, when you talk about it, they ask that either you're a land bank or land trust. So I will stop there, and you'll have, I guess, access to the slides later on, but you can see the differences between the two. We're talking about today the land trust, the community land trust. So how does the community land trust work? Well, it's a separate corporation. It's a separate not-for-profit corporation. It falls under our umbrella organization of Long Island Housing Partnership, but it actually owns and holds the title to the land forever. And a little bit about land trust. There's 3 different types of retaining property or retaining the affordability of units, and more so than retaining affordability of units. It's either done through deed restrictions, or it's done through what they call a limited equity co-op, or the third is through a community land trust. And when we first started out, we would put maybe $25,000 into a home to make it affordable. Now we're putting in about 50% of the land value, around $200,000 to make a home affordable. We don't want to lose that affordability in that home in the future. So if someone's ready to move on, all right, it's at their own choice, but if they're ready to move on, we don't want them to take the funds that were put into that home. We want it to stay in that home so it remains affordable. And we'll talk a little bit more about that as we go on. So the other thing about the CLT is that they have to be a qualified homeowner. They are given a 99-year ground lease on the property, at which time they can reapply for a new ground lease. The homeowner will own the home and all its improvements, evidenced by a deed. The ground lease and the deed are recorded. They're enforceable, legally binding documents. And should you ever decide to sell the home, you'll share in the affordability that was created for you but the next home buyer will also recognize some of that benefit. And we'll talk a little further about that in a moment, because the big thing is we want people to feel like they're homeowners. They're paying taxes on the home. They own the actual structure. But the bottom line is they can share also in some of the equity that they're building. And we'll talk about that again in the next slide. So how does the resale formula work? If someone's interested in selling after they own a home in the land trust, when you sell your home, you're entitled to get back something, right? You're entitled to get back your down payment that you put into the home. You're entitled to get back the loan principal you pay off by making your monthly payments, and you take a share of the market equity based on the increase in the consumer price index from the day that you close the home with the land trust to the day you sell the home with the land trust. That's a portion based upon the consumer price index that you receive in addition to. So that's your additional equity for being a homeowner during that period of time. You want to talk a little bit after this, James?
Sure. So, obviously one of the things is making sure we educate our home buyers and educate the people who are applying for our homes. So obviously the services that we provide to these homeowners are, one, obviously we make sure they qualify and they're put into a situation where they're not going to fail. So obviously we're a HUD certified counseling agency. So to be able to sit down one-on-one with each individual buyer and educate them on the products that are out there for mortgages, and also go over credit history, as well as other financial budgeting aspects in those sessions, really helps create homeowners to really get their foot in the door and really be successful as first-time homeowners. So obviously, we also have attorneys on staff and attorneys that we've hired to assist on the legal side as well, not only educating the home buyers, but also educating their legal counsel they may have hired on their own. So obviously that's an important thing so that they understand the ground lease and the resale formula and everything that goes into becoming a first-time home buyer. And then obviously in case of financial difficulties, we have a robust default and foreclosure prevention counseling team. So if anybody ever does get into trouble, we're able to work with them, and we're very successful in making sure that we're able to keep people in their homes long term. And then obviously maintenance of the home, being first-time home buyers, they may not know everything that goes into, creating successful environment in their home, and, what annual monitoring needs to be done in the home, and different aspects of the home.
So some of the roles and responsibilities of the homeowner is obviously qualifying and obtaining a mortgage. And Sunny Mae was a very good product. I want to thank Sherry when she worked at Sunny Mae. They had a good product in place for land trust. Fannie Mae has a land trust product, and Freddie Mac also has a land trust product, and it could also sometimes sit in the bank's portfolio. The bottom line is the only product that is really out there other than Sunny Mae and the portfolio product, that's two products I use, because I don't think Fannie Mae or Freddie Mac, even though they have the materials, because nationally we set up, James and I even sat on a committee doing the documents for the notes and mortgages to make sure they comply with the CLT status. But the bottom line is the ones that we use in New York State, usually a Sunny Mae product or one that's held by the lender in a portfolio. The other thing is the real understanding of what the ground lease means to the homeowner. We want to make sure that they, again, I know James just mentioned this, that they agree and abide by the terms and expectations under the ground lease. All right. The other thing I want to say is the resale formula. We want them to understand when they're ready to sell what their interest is in that home and what they will get out, because part of that subsidy interest will stay behind for the next affordable purchaser. And again, what their privileges are of using the land on which the home is built, right? They're not restricted. If they're going to put improvements on down the road, they would have to come back to the community land trust to make a decision on what improvements there are. We don't want improvements that are put on so grandiose that it affects the affordability of that home in the future. You want to do that one, James?
Sure. So obviously some of the responsibilities that go along with having a community land trust home are their monthly fees that the homeowner is responsible for paying for. Most of it goes into insurance and to create a reserve for replacement or repair down the road on the home, whether when they're going to sell or when roof issue happens and the homeowner may not have enough expenses to cover it on their end, we could step in and potentially do that for them. And then obviously property taxes, the homeowner is responsible for paying for the home as well as the property and the land. So that's important in the education, is that they're aware that just because the land is owned by the CLT, it doesn't mean it's tax exempt. There are some jurisdictions that work with us and work across the state, I know, to try and get property exemption taxes, but it's not a guarantee. So it's not something that we budget in. We budget in for full taxes to make sure that if there is any exemption, that it's only a benefit to the homeowner. And then obviously, the homeowners agree to keep their home sufficiently insured. And during the mortgage period, that's obviously also required by the lender. But, once the mortgage goes away, then we also mandate it. And we will have to do annual checkups on that as well. And as we said, home improvements, they're allowed to make home improvements on their home. And then we just ask for permission on writing. On a write-in, and then we'll approve that for any repairs that are done on the home. And the reason for that is we don't want them on the capital improvement side to price out maybe the next homeowner. So if they're putting in $50,000, $60,000, $70,000 in capital improvements, that could become an issue down the road for resale, and to, maybe kick out the people who are in the affordable pool that we're trying to serve, which right now is all at or below 80% of AMI. And then obviously there's a primary residency requirement that they must live in their home as their principal residence. They cannot rent any portion of their home. And obviously that is done. We do annual monitoring on that they attest to that to us.
Continue.
And then on the home buyer process, again, we covered this a little bit, but obviously the first step is they apply for the program. Once we get their application, based upon their ranking, we start to review everybody for program eligibility. And basically what that entails is that they're income eligible. They haven't owned a home in the previous 3 years, so they're a first-time home buyer. And then we also do an basic underwriting on our counseling side, just to make sure that there's nothing that would prohibit them from potentially getting a mortgage up front. And that again goes all into the program and eligibility criteria. And at that point, if they're determined to be eligible, we require them to come in for a one-on-one session with our homebuyer, HUD certified homebuyer education counselor. And then, as Peter mentioned, then we start the loan process and the mortgage process. Right now, we are specifically using the NYMBA product. So far, we haven't had to go out to any portfolio products, but we have had discussions with different lenders about having those options available. So we feel pretty comfortable that if the need arises and for whatever reason NYMBA is not an option, that we would have additional lenders step up and make these loans for other people. We also require everybody to do an orientation session. And again, this is kind of more of an education on what a CLT home is, what the requirements are. We go a little bit into the maintenance, the resale formula. And really that's just to get them to understand. We don't want anybody to be blind going into the purchase and not understand what a community land trust entails. And at that point, once they get through all that, they're still ready to move forward. We work with them and our team to select a site. We cover both Nassau and Suffolk counties on Long Island. And right now we have homes available in both counties. And after that step, obviously, once the site's selected, they're comfortable moving forward. Then we go to the purchase agreement process and work with the builder to complete the home, work with the lender and the appraisers to make sure everything is there. And the last step, obviously, is to do the closing and sign the land lease agreement and have the deeds recorded.
So one of the big things that we're really into is making sure that the purchasers understand what they're getting into. And we spent a lot of time making sure that they're represented by legal counsel. as well as that their legal counsel spends time making sure they understand the program and what they're getting into. So we're going to start off first with the homeowners letter agreement. And I took out the bulleted points of the letter. There's a formal letter that they must sign at the closing. It becomes an exhibit to the lease, but it explains a little bit further clearly. And if they have any questions, we're there to answer any, because they must go through a training about the community land trust before they actually even sign a purchase agreement. So one of the goals, you see the first one is to make sure that the homes are affordable for low and moderate income households, from one LIP CLT homeowner to the next. And some people, we find a lot of people want to stay in their home forever, and they want to ask about what happens if, when they pass away and things of that nature. And we answer all those questions. But in this case, that we want to make sure that they understand the goal and that they support that goal of keeping this home affordable. If you look at the second term there of conditions of my lease, make sure that the pre-approved qualified person as defined in the lease is in this home. That's what James was talking about, qualifying the individuals before they even enter into an agreement. And that if they sell it, it has to be either back to the land trust or to a pre-approved qualified person. As James said, we have homes available now. We have a whole list, a large waiting list of people getting into these homes. And, we will qualify them before we enter them into an agreement. So it could be either sold back to the land trust, or it could be sold to the next qualified purchaser who we provide to the homeowner. And again, the terms and conditions of the lease also limit the price for which the house can be sold. So again, it goes back to, this is one of the affordability models that are used to keep these homes affordable going forward. As subsidies become more scarce, it's more important for us to make sure that we keep those subsidies in home for the next affordable purchaser. The other thing is that they understand that they cannot be absentee landlords. They can't be moving or having another house someplace else. They have to use this as their primary home. Again, they can live in it as long as they want. All right. They can leave it to their children as long as they comply with the terms of the ground lease, or they can choose to sell it. That's up to the current homeowner who's there. And then last, on the terms of the lease and related documents are honored, that we want to make sure that they acknowledge that they feel they're fair to them. All right. Again, this is one of the requirements. This is an agreement they must sign at closing to make sure that they understand anything. Anything they don't understand will be further explained, and they can make a decision to either choose to purchase in the land trust or not. And then we go one step further as well, which is the attorney's letter of acknowledgement. All right, because they're all represented by counsel. And basically, the attorney has to acknowledge through this agreement, a letter agreement from his client. He went through it with him. He explained to them the deed conveying to the home to the client. He talked about the ground lease conveying the leased land. All right. And then again, any other material that was provided, we provide a whole host of material explaining about the community land trust to make sure that they really understand what they're getting into. They're not buying the land. The land will remain in perpetuity. All right. In the land trust, in the community land trust name. They are actually purchasing the structure and the improvements on the site.
Yeah, I mean, these two documents are critical because, I mean, we've done deed restricted homes pretty much since I've been at Long Island Housing Partnership over 20 years. So we always get the home buyers who call or come back 15 years later and say, oh, I'm looking to sell. I've paid off all my grants. I just need your release to go and sell my home on the open market. And we go, well, there's deed restrictions. You can't sell it on the open market. You have to sell it to another affordable buyer. And then the homeowners get upset because they say it was never explained to them. We say it's in your deed. You had an attorney. Your attorney was supposed to explain that to you. And then we get, well, my attorney didn't really do a good job. So we try and make sure we convey it as much up front and make sure they sign off on what the terms are and have the attorney acknowledge as well that it was explained to them, because the last thing we want is to, have an argument 15 years down the road that they didn't understand the requirements of being a community land trust homeowner.
So the next slide kind of says where we are. We started I want to say about right before COVID, building homes to be put in the land trust. As you could tell, probably James has been with the partnership for 23 years, going on 23 years. I've been there for going on 35 years. At that time, I was not president. There was a former president there, and he chose not to go and establish a land trust. We decided to establish a land trust for two reasons. One, when there was a downturning economy in 2009, a lot of elected officials came out to us and said, can't you do something with the foreclosed homes? You know, can't you take them back? Can't you do? And I'm like, we don't own those. And then the local elected officials started asking more about the land trust model, and they were interested in us putting something in place. And there are other community land trusts that are on Long Island. A lot of them failed because they were too small of a geographical location to be able to buy homes or get homes in that geographical location to put in the land trust. You need economies of scale. This is actually a corporation. The Community Land Trust is actually a not-for-profit corporation established to keep these properties in perpetuity. So it has all the auditing requirements, it has all the financial requirements, it has the staffing requirements to make sure that these homes stay in there and they're in good condition and there's no problems. One of the beauties of the land trust is that we can step in sooner if there is a problem. If a family's having a problem, they can come back to us. If they're having a problem with their mortgage payments, if they're not being maintained, we do go back and work with the families to see how we can correct the situation. So they're part of what we would consider the LIHP family in the land trust. So since we started right before the COVID, we have 18 homes that are constructed with COs and closed. By December of 2022, we have another 14 homes in contract right now that will be finishing this year, and we have another 50 plus homes being planned. There are ground lease fees associated with the land trust, and again, I will say that every one of our homeowners is current in their fees. We reduced the cost of the house to make sure that they can afford the fees, just like if they were a condo fee or a homeowners association fee or co-op fee. So there's a lot of, again, there's a lot of education that goes on with the families. There's a lot of education going on with the public and with government to understand the land trust model. If you want to flip the slide, James, we could show some of our homes that are in there. This was in a historic district in a downtown village on Long Island. It was in deplorable condition. We came in and we actually redid the whole house. We had to keep it in its historic nature. And the village actually asked us to come in and wants to keep it in the land trust so that if, it will always remain as an affordable home in their village. All right. So this is the one home that we did that was a rehab at this point. The next home, we got a lot of our properties, 21 properties from the Government of Storm Recovery, the former agency called the Government of Storm Recovery during Sandy. And we took down all our homes and we actually built new ones to the new FEMA standards so that the families would not be affected if there was another storm down the road. They're all elevated, as you can see. In some of the pictures that James is flipping through right now, they've all been elevated. They're all 3-bedroom units, and they are all built to FEMA standards, whether it's the windows, whether it's the siding or the material that was used. Again, water will flow through the bottom and go back out. And, again, even with these homes, we work with the homeowners to understand what it means to be in a flood zone and make sure they have the proper insurance in place. All right, and to make sure if there is a flood that they know what to do in their community. So these are other homes that we build. These are 3- and 4-bedroom homes if a family needs a larger home. Again, these homes sell a little over $200,000 after the subsidy is into it to the home buyer. These homes cost us about $430,000, $460,000. The elevator ones cost us about $460,000. These cost about $430,000 to build on Long Island. So we don't want to lose this home out of the affordability pool. All right, if the person that's living there now can afford something else and wants to move, that's great. We just want to make sure this house remains affordable to the next family. We have, I think, an estimate of 150,000 homes that are needed, affordable homes on Long Island right now. Again, another one. This is another elevated home that was done. That was another elevated home, and basically that gives you an idea right now. So we always build to try to fit the home into the community that's being there. Over the years, we've always done that. So depending upon what homes are in the area, we take a very close look at, depending upon the property size, etc. We will build a home that will fit on that community. We have some small homes that were in the East Rockaway area, closer to the city, where we had to redesign the home to make sure it fit properly on the lot. So I'll stop at this point and see if anyone has any questions.
Yeah, if you have any questions, please use the Q&A or the chat. We're monitoring both. But that's fantastic. I have a quick question for you. Maybe you could expand on how you acquire either the piece of land or the house. How does that start off?
So it's always been over the years that we receive tax default properties from the local governments. Most of them are blighted. Most of them have been sitting there for at least 3 years. I think it's 2 years, 11 months before they can actually foreclose on the property. So by the time we get it, it's basically overgrown. We work on the reverse of the broken window theory. We'll go in, we'll clear up the lot, and we'll put a new home on, which brings up the surrounding community values as well, because everyone else then starts doing improvements on their home. So that single family scattered site has worked well on Long Island. There are other areas like with Rebuild Long Island, the beautiful sites down by the water that the state turned over to make sure that we made some of those homes affordable. So it really varies. Sometimes we buy a home. That one house, which was the rehab in the village bought the home and in turn turned it over to us for a small fee, what they laid out. So it varies when it comes to the land trust. We actually, I should say, I'm sorry, Brian. I should also say that we did do one with the land bank. They acquired properties as well, and we rehabbed them for them. There was one that there was a renter in the home who was not ready to be a homeowner yet, and normally they would sell off the home. As we said earlier, they get their money back right away. They then turned that property over to the land trust so that we could work with the family, so that someday they could be a homeowner. Yeah.
I'm glad you brought that up. I was just going to actually answer the question I was looking to ask. I was curious about your relationship with land banks. Seem to have a kind of an opposite structure. Is there synergy between the two business model styles of doing business?
Yeah,
absolutely.
There is. I mean, we work with both Nassau County and Suffolk County Land Bank. And whether or not they're going to work with us to put the homes in our land trust, whether they do that or not, we enter into what's called a technical assistance agreement with the land banks, and we may do the lottery, the marketing, the screening, and get qualified buyers for their homes. So we do that across both counties. So those homes may be sold not under the community land trust model, but we still do, what really is our business model is to get affordable people into homes. So we'll do that for the land banks as well.
Excellent. We do have a question here. So we're hoping to have you expand on some of the income restrictions, drill down on those. Can applicants get grants for closing costs? And there's a few questions here. Who builds the homes? And obviously, do you have to be Sonny Mae approved to be a lender? I'm imagining.
Yeah, right now, as I said, most of our all of our homes so far has gone through the Sonny Mae lending product, but we have had discussions with other lenders for their portfolio products in the future as well. And Sonny Mae does do a good job of giving closing costs and down payment assistance as well. In regards to grants and other subsidies, we work with New York State Affordable Housing Corporation. We get federal home funds in all these homes, and really we just try and write for any grant that we think would be needed for this type of program. In regards to builders, we usually go through a bidding process to try and get good qualified builders. We have two different builders right now, one who's doing specifically our rebuild properties, which are the properties in storm flooded areas. And then we have another contractor working on our scattered sites in Suffolk, who's worked with us pretty much since our existence. So we're always looking for new, different qualified builders. But yeah, it's usually done through a bidding process.
And income restrictions for applicants, 80% of AMI, is that?
Yeah. Right
threshold?
now, all of our homes are at or below 80% of area median income for Nassau and Suffolk County. We have built other homes that reach higher income thresholds, but most of the restrictions that come with the properties that we've gotten, either if it's from the Governor's Office of Storm Recovery, or whether it's through, as Peter mentioned, a 72H program where we get foreclosed properties given to us from the local municipality, they all have 80% AMI restrictions on them.
Yeah, and the state gave us some down payment assistance funds to help some families too. So a lot of our rebuilds even went down to 60% AMI.
Gotcha. Would imagine the AMI calculation plays a role in future value should the house be sold.
Exactly.
Okay, so that I guess that set up to the question: if and when a family does decide to sell the home, there's a opportunity to share in the equity appreciation of the property, but subject to AMI. Is that a fair statement? Which
Yeah, the same AMI restriction is on the resale. The homeowner is allowed to take equity based upon what capital improvements they may put in up to a certain amount, so it doesn't price it out of that income population, and then also based upon consumer price index, which over the last few years has been higher than normal years. But so that the longer you stay in the home, the more equity you build, the more you pay off your mortgage. So the longer people stay, the more of a equity they get out of their home.
Okay. Another question is asking about minimum down payment required. Do you have your own overlays with regard to down payment, or do you pivot to the Sunny Mae or whatever financing option is out there? And a follow-up to that question was, do you accept the Homebuyer Dream Program grant?
Yep. That one home you saw was a Homebuyer Dream grant program that was elevated in Sandy. I would totally agree that we will follow whatever the lender is required, but we usually look between 3% and 5% down upfront, depending upon, again, what they need for their mortgage.
Yeah, we've had some veterans loans as well through the VA, that don't require any type of down payment. So we'll work with the products that are out there, to work with each individual buyer.
Excellent. One of the things that Sherry and I and the other folks at the NYMBA, we just had our advocacy conference. One of the things that we had talked about and brought up for legislators was the shortage of skilled labor, and try to figure that out because it's driving the cost of real estate up across the board. Are you experiencing challenges with skilled labor to complete things on time, or you should even develop the housing stock that your goals identify?
Yeah, I mean, absolutely. And we're also getting hit with supply chain issues, increases in costs for different aspects of the build. Lumber went up, a few years back tremendously while we were in the middle of construction. We were hit with COVID delays where subcontractors didn't want to go into highly infected areas. So we hit delays on that. So yeah, we absolutely, have those similar issues, I'm sure, than other people do. We try and work with, quality contractors who have a list of subs and have a line of subs that they work with. But yeah, I mean, that's always a concern is, getting it in within a good price to make it affordable to the population.
And let's not forget insurance that's required by these subs and subcontractors. It's the insurance is a big issue, especially on Long Island and New York State.
Right.
Is the homeowner allowed to make improvements themselves without hiring a contractor?
We would just ask for permission, for our approval on whatever type of improvement they would want to make. And, obviously we'll talk with
I want
each
to
of
redo the electric. Well, are you an electrician? No.
Well,
Maybe not so.
that's a municipal requirement.
Yeah. It has to go in front
Yeah.
of if there any improvements have to be approved
Right.
according to the ground lease. So that would go to us, and we would not allow someone to replace the electrician.
No.
Yeah, that kind of makes sense. That makes sense. So how does the lending community reach out and integrate with land trusts, community land trusts? What would your advice be to the folks on the call here to get more involved with your programs?
I think if they're willing to lend under a land trust model, if they're a Sonny Mae lender, a Fannie Mae lender, Freddie Mac lender, have a product and want to learn more about lending under the land trust, I think they should reach out to us. We're a HUD counseling agency. We have to supply people with 3 different lenders every time someone comes in for counseling. So we work with many lenders. So anyone who's interested, our doors are always open.
Yeah, we try and work with lenders up front before we know, homes are going to become available, and we try and get the deed and the covenants and restrictions and whatever the notes and mortgages are on those homes. We try to get them to different lenders ahead of time. We hold what we call lenders, lunch and learns or breakfast meetings, where we kind of bring in each different lender we work with and educate them on the different programs that we have, not only the community land trust, but other ancillary programs like down payment assistance programs, employer assisted housing programs, and then other programs that we administer. So we try and do as much legwork up front to help the lenders get it through underwriting before an actual buyer is in place and that they're actually working with a client.
One thing that might be interesting for the lenders to also know is that any subsidy that goes into these homes, it's behind the primary mortgage there. So we usually work out the subsidy layering process ahead of time, whether federal or state funds are going first or second. And that's all part of that education piece that James mentioned. We'll provide them all on a flash drive or a flash drive or anything that they need to have the documents so they can send on to legal ahead of time, so that we can cut the time frame down once we do have a candidate they're working with and go through and get their mortgage.
Gotcha. Is the subsidy recorded with the deed? Is it part of the official documents? I'm just thinking from a combined loan to value standpoint, if the subsidy would push the combined loan to value well above 100%. Or not?
Actually, the subsidies are there's in the contract, there's a purchase price and there's all the subsidies behind it. The subsidies go behind all the primary lending. When there's a default, usually those subsidies, you never even get to any level of those subsidies. Let me just tell you.
Yeah, we run into the similar issue with using home funds, because if the appraised value doesn't come out at the same level as our unsubsidized sales price before the grants, then we have to write off a certain portion of that grant. But so far we haven't come across it, because a lot of the homes we're doing now are in high cost areas where they're appraising for $200,000-$300,000 higher than even our unsubsidized sales price.
Yeah.
Gotcha. And just to zoom out a little bit from a macro standpoint, it sounds like this, under the circumstances with housing the way it is, that this business model should be very attractive to that home buyer, the first-time home buyer that's looking for a house, but has been recently completely priced out. From the macro standpoint, where do you see this business model or this housing model going in the future in New York? I guess what are the big hurdles to broad adoption and scalability?
It's not only in New York. I think nationally it's being scaled up, right? The other models, if you just have a deed restriction and it has to remain affordable, the person can sell it and take all their subsidies and walk away from that house, right? And that's in some cases, and I'm just going to use examples in Southampton, which has some of the highest cost areas on the island. The person could sell the home and could make up to $500,000, profit. Right. So I think that the land trust model becomes more favorable because it creates more in perpetuity, the affordability, and it keeps the affordability with the home as opposed to going with the first buyer. So, I think it's being scaled up nationally as well as locally on Long Island and New York State. You see more people using this model because they have a little bit more control on keeping that home affordable for the long term. Subsidies are becoming more scarce across the state and locally and nationally. So you're going to see that they're going to want to keep that money, and it keeps the public purpose. That's why we're doing this. It's for public purpose, creating affordable housing. So you'll see, like I said, the elected officials were strongly supportive of it. They want someone to come in because their neighbors are complaining because it's bringing down property values elsewhere. All right, when there's a default, so come in, get another family in there, and keep that community's property values up. So there's a lot of reasons that people are looking at this model more favorably. I will say years ago, they probably never even heard of these types of land trust. That out on Long Island, there was one original land trust that was for employees to live, to provide housing for employees. You never know. Maybe we'll be going back to that too with some industry. We have a lot of industry and industrial parks on Long Island who transport employees in every day. Now they're allowing to build 5-6 stories above their industry. And obviously, I'm sure they'll put something like that into a land trust.
I think the more you can broaden the region that you're covering, I think the more chance of success you're going to have. We have a few smaller CLTs on Long Island that cover one community, and getting property on Long Island is very difficult. So if you're hamstrung by a couple blocks that you're going to work in, it's very difficult to get enough properties to sustain the business model. So obviously us doing development for 20, almost 30 plus years before we started a community land trust, we had the expertise in development. And then we, saw an area of focus as being, it should cover both Nassau and Suffolk counties, because you'll never do enough properties in one area to really make it a sustainable model. So there are local ones that we work with, and, we try to educate them and, work in their communities. But, we see success really. The more you can broaden the region that you're covering, the more chances and opportunity you have to get more properties to make it a sustainable model moving forward.
Yeah, that makes complete sense. So have another question from the chat. What's the waiting period if the applicant qualifies? Do they have to be pre-approved to apply?
Yeah, they don't have to be pre-approved to apply. We screen them as the applications come in, and then get them through the qualification process, have them start working with a lender. And then once, we get the okay from the lender that they're mortgageable, that's basically the point where we give them a time frame on when a home's going to be built. We don't normally start construction of a home until we have a home buyer in place, because we don't want to sit out there for security reasons and other reasons, insurance reasons, with a vacant home just sitting out there for months and months and months. So we try and have them in contract in place prior to construction starting. So it could be anywhere from a year. We've seen some cases 2 years that people have a time frame to move into their home due to municipal delays, COVID delays, things like that. So normally we try to do it within a 6 to 8 month process from when they go to contract to close. But working across different municipalities, sometimes we hit snags and delays that sometimes drag out a little longer than we like, or the future homeowner likes.
And James, I should say, when we had COVID and we had those increase in costs, we actually went back and found additional subsidies to make sure that home remained affordable. So, while this is all going on, we make sure that these families can really afford it. We don't want a foreclosure coming down the road. So it required us to come back and I think increase the subsidies about $60,000 overall, right? That during COVID.
Mm-hmm. Yep.
And another question from the chat. We've got a lit chat today. Do buyers have to use one of your approved lenders, or can they go to any bank that offers Sunny Mae?
No, they can go anywhere. Yeah.
Excellent. Well, that's all the questions I had. Sherry, I hate to dominate the Q&A here. If you have question or two or whatever. We've got a couple minutes before 1 o'clock. We can open it up again for questions.
I actually have nothing. I had a couple questions jotted down, but they've all been covered in this awesome discussion that happened. And so if nobody else has anything, I really just want to thank Peter and James and all the attendees